When you think about gold, you probably picture a shiny gold bar, right? Or maybe some old historic coin. But here's the thing. When you invest in gold, you're not just buying a piece of metal. You are buying into a gigantic, incredibly complex global system. So what are you really buying? Let's dig in. See, if you're thinking of getting into gold, before you even start looking at coins or bars, there's a much more basic question you have to answer first. And this one choice, it completely changes what you actually own and what kind of risks you're really taking on. And it all comes down to two totally different ways of owning it. Understanding this choice is pretty much the key to unlocking the entire gold market, from what's sitting in your personal safe all the way to what's deep inside the biggest vaults on Earth. Okay, so the first path is what's called allocated gold. This is the one most people think of. Honestly, it's a lot like owning a house. You have the legal title to specific identifiable bars or coins. They are yours, period. It doesn't matter if you keep them at home or in a high-security vault. But then there's the second path, unallocated gold. Now, this is more like owning a share in an apartment building that someone else manages. You don't own a specific brick in the wall, you own a claim on the institution's entire pool of gold. And this part is absolutely critical. It makes you a creditor. The gold is an asset on the bank's books, not on yours. So this table really just lays out the central trade-off. With allocated gold, you get that direct ownership, and you have zero counterparty risk. That means if the company holding your gold goes bust, your gold is still safe. But that peace of mind, it comes with higher costs. Unallocated gold, on the other hand, is cheaper with lower fees, but you can't touch it, and you're basically riding on the financial health of the bank. So the choice really boils down to one question. What's more important to you, ultimate security or lower cost? Okay, so that's the decision you face as an individual. But your choice is just one tiny drop in a massive ocean. So now let's zoom out and take a look at the huge global forces that are actually setting the price of that gold no matter which way you decide to own it. Get this, in just one recent quarter, total global demand for gold was over 1,300 tons. I mean, that is a staggering amount of metal. It's one of the highest quarterly totals ever recorded, and it just gives you a sense of the sheer scale we are talking about here. So who on earth is buying all this gold? Well, this chart breaks it down for us. And while jewelry is obviously a big piece of the pie, you can see that the single biggest driver is investment demand. We're talking about people like you and me, buying bars, coins, and gold-backed ETFs. And right behind them, the world's central banks, which are just steadily adding hundreds and hundreds of tons to their national reserve. And this right here really gets to the heart of the story of gold today. It's not just about decoration anymore. The record high prices we're seeing are being driven by finance and by geopolitics. You've got investors on one side looking for a safe place to park their money, and on the other, you've got entire nations strategically stockpiling what they see as a core financial asset. So with all this buying happening, you have to wonder, where is all this physical metal actually being kept? And the answer to that question reveals the hidden plumbing that holds up the entire global market. Well, a massive portion of it sits in vaults deep underneath the city of London. We're talking more than 8,000 tons of gold. It's a mind-boggling amount, and it makes London the undisputed physical heart of the world's precious metals market. So, who are the keepers of all this treasure? You might expect a long list, but it's actually a surprisingly short one. Just a handful of incredibly powerful institutions, a mix of major global banks, security firms, and, of course, the Bank of England. They control the physical supply that backs up trillions of dollars in daily trades. The London Bullion Market Association, the group that oversees this whole thing, they put it perfectly. These vaults aren't just warehouses, they are the gatekeepers and custodians. Basically, if you want to trade huge amounts of physical gold on the world stage, you have to go through them. There's no way around it. All right, for our final zoom out, let's do the most important thing. Let's follow the money. We've seen the product, we've seen who's buying it, and we've seen the infrastructure. Now let's look at the financial giants who really run this system, and more importantly, how they actually make their money from it. And the numbers here, well, they can be astronomical. To give you just one example, back in 2020, a single bank, JP Morgan, pulled in about $1 billion in revenue from its precious metals desk. That just shows you how incredibly profitable this business is for the big players right at the center of it. But here's the kicker. This is the part that might really surprise you. You'd probably think that the big money is in storing all that physical gold, right? It's not. Not even close. Those vaulting and custody fees, basically the rent you pay to store your metal, that's only about 10% of a bullion bank's profit. The other 90%? Yeah, that comes from all the financial layers they've built on top of the physical gold. So where exactly is that other 90% coming from? Well, the real money is made in trading, making profits off of tiny price moves and arbitrage. It's also in financing and leasing. They actually lend out gold to businesses like jewelers and miners and earn interest on it. Those fees for just storing the metal are really just a small, steady slice of a much bigger, much more fast-paced financial operation. And this is why it all matters to you, the individual investor. This whole incredibly complex system, from the trading desks in New York to the vaults in London, it's run by a very small club of powerful banks. And their actions, their trading, their lending, their storage policies, all of it directly influences the price you pay for your gold and how easy it is for you to buy or sell. Which brings us right back to where we started. Now that you've seen the machinery working behind the curtain, you kind of have to ask yourself, is gold that simple, tangible, ultimate safe asset you thought it was? Or is it really just another, maybe shinier piece in a complex financial machine that's run by the very same banks at the center of everything else? The answer just might change what you think you're buying.